Hello everybody, welcome to my new YouTube channel, Trading Secrets. My name is Ali. I have 20 years experience of teaching accounting, business, economics and law. I'm here now to improve your trading skills, increase your knowledge and also improve your strategy. Okay, right, next part of the video we're going to look at, I'm going to look to provide you with an in-depth course in each video, section by section, looking with the objective of improving your knowledge, increasing your skills, improving your strategy, reducing your risk by teaching you trading strategy. So the first thing this involves is increasing knowledge, having an understanding. And first thing I want to do is tell you what is a shareholder, what are the risks, and what can affect the value of a share. Okay, so first of all, a shareholder is an owner of a business. So me and you, as potential investors of a company, become the owners as soon as we click that buy. So as soon as we click that buy, we are the owners. That company belongs to us, whether it's Tesco, whether it's Rolls-Royce, whether it's Neo, whether it's Li Auto, any company, you buy the shares, you become a part owner of that company. That company belongs to you. You are a shareholder. So as an owner, as an investor, your reward is sometimes it's potential dividends. A dividend is like a cash bonus once a year. Normally these are paid by the larger companies, and the reward for the smaller companies, possibly maybe penny shares, would be the return and increase in the value of the share and the resale value. So let's look at what can affect the value of a share. Well, potentially there are many things, probably over hundreds and hundreds of factors that can affect the value of a share. So the value of a share, as you can see on the screen, I'm just going to cover maybe a dozen quickly and tell you what kind of things. So we've got patents. So a patent would be legal protection for a business that has come up with a new idea, a new product, a new way of doing things, and this gives them exclusive rights to sell that product for a specified period of time. The advantage of that for that business is potentially huge profits, potentially huge sales. Benefit for us as shareholders is a massive increase in the value of the share. So always keep an eye out on patents. Look for patents. Any company with a patent that's granted it has exclusivity. It eliminates competition, and it's a good thing. Okay, we've got regulation and lawsuits. I'm also an investor in a company called ATVK, ticker symbol ATVK. They have an upcoming lawsuit. If that lawsuit goes through and wins, potentially this share could rocket in value. It could be 3, 4, 5x. We have to see. I mean, the stock market is not a perfect science, as I said before, and it's subject to unbelievable movements, changes that nobody can predict. So the winning of that lawsuit, you're taking that chance, you're taking that risk. But my indications are ATVK are potentially going to look at a successful lawsuit there, leading to an increase in the share value. So that's one to keep an eye out. You've also got regulation that has possibly could have the negative effect on the value of your shares. One example of this was, the US government introducing potential legislation against Chinese businesses, requiring them to comply with accounting standards in America, and the consequences of also potentially being delisted. This led to some Chinese-based companies losing value in shares, going down in price, such as companies that were not even at risk. So, you've got your Li Auto, you've got your Neo, you've got your Xpeng, these also, and Alibaba. These companies went down significantly in value just on a potential change in law, even though it might not have affected them. But the market is very volatile. One of the things that the market doesn't like, if you have a look on there in blue, one of the things I've written down is uncertainty. Uncertainty, in my opinion, is probably the biggest thing that affects the value of a share. It's easy to do something about something you know, and it's not easy to do something about you don't know. So that uncertainty, when you don't know, the share price will go down, and that's a big problem. We can see breaking news, we can see tweets. Just a simple tweet from a major organization such as Citron, or from a CEO of an organization, could cause the share price to go up or go down. If you remember, we had the NASDAQ tweet from Alpine, and that caused Alpine shares to go up by more than 30% within minutes. The tweet by Citron against NEO, saying NEO was overvalued, that caused a temporary fall in the NEO share price of 20%. It did recover, but the impact of the tweet is a fall in the value of your shares. And one of the reasons why some people, you could argue, are manipulating the market like this is to take advantage of cheaper share price, which they know is going to go back up very, very soon. So you have to be prepared for this. You have to accept it. One of the most important things what we say is, obviously, any money you invest in shares has to be money you're prepared to lose. If it's money for rent, if it's money for bills, money for food, it should not be placed in shares. It should not even be in an ETF fund. It should not even be in any safe company. It should be protected. So the share market, the stock market is not the thing for that. So we've also got the economy. We've got changes in profit. Obviously, increase in profit will put the price of a share higher, giving us potential return. You've got potential mergers. A merger will always put the value of the share higher. For example, you've got the recent merger from IPOC and Clover, ticker symbol CLOV. Just before that merger, the share price went up within the 4 weeks prior to the merger for over 50%. And I was an investor in IPOC, and I benefited from this rise in shares. I did sell and cash in some of the profit on the way. This is positive news. So whenever you see a merger, it's positive news. So you should always welcome that, because it's two companies becoming one, which always means bigger size, bigger power, more potential, more market share. Okay, right. I'd now like to talk to you about two potential investments. Tomorrow, before I do that, I'd just like to say, in my next video that will come out, I will be sharing my full portfolio of investments, and I will be talking out each one. That will include the good, and that will include the bad. So let's look at the first one for today. So the first stock I would like to talk about today is ticker symbol FVRR, Fiverr. So Fiverr International. So you may be aware of this company. This company has a market cap of 9.4 billion. So it's got a huge potential. If we look at the 1 year chart for this one, then it has run up over 900%, and it's not stopping. Now, if you check my average price in the chart there, I just bought this share less than 4 weeks ago. My average price is about 208. It is now 267. And then on the Friday, there was a small dip of 1.19%. So I believe this is still a little bit of an opportunity to bear in mind that if you want a sustained growth share, then this is one that I would certainly put on your watch list. Fiverr has recently reached record levels in its stock market share price. They're going from strength to strength. In 1 month, they've increased by 31.98%. And it's Earnings are expected on February the 18th. So this is an excellent time to look at that share price of Fiverr. Consider investing. I would recommend an entry point on this one anywhere below 260. So if you see this coming in at 260, I would strike. If you see this coming in at 255, I would also strike. Anything above 270, I would hold. But this is certainly one of the shares that I would hold for long term. Excellent potential, and I will certainly be holding Fiverr for the long term. So put this one on your watch list. Okay, the next one I'd like to speak to you about is a company called SENS. So ticker symbol SENS. This is a penny stock. This has got huge potential. On Friday, this one ran up 31%. There was a little bit of a dip towards the end of Friday, and this is a company that I'm going to be putting my watch list on. I'm going to be putting on my watch list. I'm going to be looking at this. I believe this company will 10x certainly within the next 3 years. Within the next 3 years, I believe this company will 10x in my opinion. Okay, so let's have a look at what is SENS, what kind of company they are, what are they about. So if you have a look at the screen there, you'll see that this is the world's only long-term CGM system. So it's continuous glucose monitoring. So they have developed a system for diabetes where they can monitor the blood glucose up to 90 days under the skin with a sensor and removable batteries and a convenient app to go with it for real-time diabetes monitoring and management. And this is excellent. This is really good news. This, for going forward for the future. The sensor remains accurate. It's comfortable under the skin, and it's monitored and installed by professionals. So there's also an app that goes with it, that can track your meals, track real-time glucose measurements. So it's a great innovation. It's a great potential. So what else can we see about this company? So if we look at this company, we can say there is huge growth potential. So we can see that long term that this company could 10x, as I said, and it could also be something that is unique without competition. So that's very, very important when you're looking at a share. You're looking at something that the competition is not good. And SENS, I believe, has had a bit of a run up, but at $1.58 closing price on Friday, I still believe there is room for this to go. And in my portfolio, I do have some medical shares, so put this one on your list, guys. Okay, thank you very much. That brings us to the end of my first video. I hope you enjoyed it. I hope it was useful. So please check back in tomorrow, where I will be giving another lesson in shares, another lesson in improving your strategy, your knowledge, and hopefully helping you to reduce your risk. And please remember to click like and subscribe. Let's try and make this channel grow, and let's take this further, create wealth for everyone. Thank you very much.